Bernard, lots of discussion on tax reform. What are the key provisions that will affect inbound companies?
There really are three. The first one is a significant restriction on interest expense deduction limitations. Two parts to it. One is a 30% of EBITDA style limitation that we've seen in other countries. The second one, which applies concurrently, and you pick the worst one, essentially applies a worldwide debt cap of great significance and impact for our US and non-US based multinationals alike. Second, an excise tax. Excise tax essentially applies on the purchases of property, the licensing of intangibles, the purchase of services. 20% gross tax can be reduced by essentially allowing for the seller of those goods or services to elect to pay tax on a net basis. You get a credit for it, but it's really only a limited credit. So this will have significant impact on US and non-US based multinationals with integrated supply chains. Third, a significant expansion of the CFC provisions. Those CFC provisions would essentially, from a reporting perspective, treat all entities within a group as CFCs. So I have a foreign parent with 1,000 subsidiaries outside the United States. They will all become CFCs. So reporting there will be incredibly onerous. And second, there's also an expansion of the universe of US-owned foreign affiliates that would be subject to the anti-deferral rules. So significant changes in all three areas.
Three very complex provisions, and certainly as things progress through the tax reform journey, companies should keep abreast of all of the different changes. And of course, I suggest they should model out the implications as the effective dates are not that far away.
Absolutely. Stay tuned.
Stay tuned. Thanks, Bernard.
Sure.